and welcome to the Beyond the Dollar Signs podcast with your host, Mark Taylan. Mark, getting near the end of the year. How are you, my friend?
I'm great, doing great. I can't believe it. We're already almost to the end, and next thing you know, we'll be in 2026.
I know, and then everybody will have to. I've already had to make a couple of notes about 2026, and I found myself having to go back and correct myself because it's still 2025 till who knows when.
I
But it's a
know.
big year. So I mean, not the least of which is the 250th birthday of the United States of America. So it's going to be a heck of a year, and I think it's going to be a lot going on. I think it's going to be a very good, fun year, as a matter of fact.
I hope so. It's hard to say whether we're going to have headwinds or tailwinds or what's going to be the outlook for next year.
Well, it's interesting because recent surveys about markets and consumer sentiment is actually like at a 4-year high as we tape this. So it's like we'll see. Not that the consumer is always right, but they're feeling optimistic, which is why I like today's topic a lot because it's an important one because I don't think a lot of people think about it. But there is a very big difference between building wealth and protecting wealth. So why don't we start with that, Mark, and tell me, first of all, give us a couple of definitions so that we know what the ground rules are and what everybody knows what you're talking about.
Yeah, let's keep it simple. So building wealth, we'll refer to that as offense, right? Building your net worth, and we'll talk about it from a kind of a sports analogy.
Yeah.
And protecting wealth is defense, right? So we'll talk about, how do you protect the wealth that you've built? And so I think that the theme is for people to think about for this year is, what were you doing? Were you playing offense and growing your wealth, or you're playing defense and protecting it?
Mm-hmm.
And so I find different people in different situations, maybe acting totally opposite for 2025. So it's a topic that I like to talk about because I'm always thinking about both. And so the question is that which should you be focused on, or should you be more balanced?
It's a good question. I mean, they're both legitimate strategies, right?
Absolutely. Yeah.
So the question is, when do you go on the offense? And when do you would think maybe you should play a little defense?
Well, I think it all comes down to planning, right? You have to have a goal in mind. So I think when we think about, what you're trying to achieve, sometimes that's a certain number, a certain net worth. Maybe if you're trying to grow your investable assets like your 401ks and your real estate portfolio, I think many people, their objective is to grow that to a certain net worth. So at some point, those assets can produce income, whether that's rental income from real estate or whether that's investment income from what they've accumulated over the years. And so what I find is, it's been a fabulous year. The S&P 500 is close to 20% return for the year. And so that's not normal, right? The S&P typically we don't have a year like that. And it's been a challenging year, I would say, from a standpoint of all the news and all the news that's out there. In April, we started with the tariffs, and we saw a pretty significant decline in the market, followed by a quick rebound. So I think it's been a very, for people that have been offensively positioned, meaning that they're trying to grow wealth, it's been a really good year.
Yeah.
And so I'm sure they're thinking, what's on the horizon? As you said, consumer sentiment is up, people are optimistic. And so what should they do next? So that's one side of the camp, is those that are looking to continue to grow the portfolio.
Mm-hmm. What is the example of somebody who's looking at, that they're thinking, I'm comfortable where I am, and I maybe ought to be practicing a little bit of defense. What are some examples of a defensive strategy?
Yeah. So when we talk about, once you've kind of accumulated that net worth, or you've had a really good year, remember the markets don't always go up as a straight line. So at some point we start to see a dip. And what I always try to counsel people is, at some point, maybe you want to start thinking about protecting those gains. And so a defensive strategy when it comes to investments is the obvious thing is rebalancing. If you've
Mm.
had a lot of stocks and bonds, typically you'll have a portfolio of both. But if your stocks have done really well and you started 50-50, now maybe you have 70% stocks and 30% bonds. And so usually at this time, you start to think, well, I've been aggressive. It's helped me. Now I have got an imbalanced portfolio. I'm more positioned for growth, for offense than defense. And so it's probably time to consider maybe rebalancing that defensive part of your portfolio and bringing your allocation more to a 50-50 versus a 70-30 because the market's been so good.
Yeah, but
So
I mean, I think a lot of people when they think, I think Mark, clear this up for me. I think a lot of people when you keep talking about getting defensive, and I think a lot of people think, oh, that means like, it means like buying bonds, and and the truth is that a defensive strategy is actually more encompassing. It's larger than just rebalancing your portfolio between stocks and bonds, right?
absolutely. So when you get into the granular details and you look at a portfolio, you can start to look at sector weightings,
Hmm.
allocations to domestic versus international. And so when you spread your portfolio and you look at under the hood, you can see areas where you may not have as much exposure. I'll tell you that this market has been driven by two things this year. The technology stocks have been tremendous again, like the Nvidias of
Yep.
the world, the Teslas. The Mag 7 continues to lead. And if you've had exposure, that's where a lot of the return has come from. What's fascinating this year is the rest of the market is starting to move up as well. And so you're starting to see that rotation. A lot of the international stocks are up double digits this year. So now maybe it's not time to not just go rebalance from stocks to bonds, but think about what exposure you have to the different sectors. Are you balanced in your stock selection across the board?
Mm.
Maybe the stocks that when stock prices go up, you think about like the Nvidias. You look at the price to earnings ratios, meaning that they're kind of expensive, right? If
No,
prices keep
really,
going
are
up,
they?
you look at the price to earnings and you're going, well, can this continue? And so maybe there's stocks that that are out there, which there are, that they're not in technology. Maybe they're in consumer discretionary. Maybe they're financial stocks. And so it's time to really start to think about what's the strategy? What do I really own? And how do I rebalance this to be more defensive, right? Because it's kind of the same thing. If you have all of your eggs in equities and stocks and it's all in technology, how defensive are you? You're really playing offense. You're
Yeah,
betting
but
on
say, look,
one
Mark,
sector.
it's really cool to say you own a bunch of tech stocks and you've done really, really, really well with it. You know
Yeah.
that everybody likes flashy offense. Everybody likes talking about how many yards they gained, right? Everybody
Right.
likes that part of it. And not so much so like oh yeah, I made some good defensive moves. I upped my insurance coverage, or I checked my beneficiary
Yeah.
packages. That's just not nearly as exciting, right?
No, let's get into the trenches, right? And let's just get 3 to 4 yards of carry. Let's do the
Yeah,
slow and steady, right? versus
exactly.
versus let's get that touchdown in 2 plays. So I feel where clients are at. I think it's euphoric to see the type of performance that we've seen, right? I mean,
Yeah.
the accounts have done tremendous over the years. There's no question this has been another one of those years. But at some point, there is a reckoning. I always think if you're in the market long enough, there'll be a prolonged period where the markets decline. And if you look at
Yep.
charts over history, every year we may finish positive, but somewhere in the year, there was a negative downturn typically. For example, this year, if you were in the
Oh yeah.
NASDAQ and you had a great year, but somewhere along the line, you were down 20%. So that's something to consider when it comes to stock investing. There's other things to consider as well when it comes to protection. That is how else can you protect your position, right? So that means making sure that you've got insurance, that you've done all the planning in place, A lot of different strategies, not just for investments, but the overall picture.
Yeah. No. So if I'm a client of yours and I come to you and I sit down and say, okay, Mark, we did really well this year. You manage my portfolio. We've done great.
Yeah.
And I ask you, what should we be at least thinking about doing? What's your answer going to be?
Well, it's going to be really dependent on, my clients. We have certain targets in mind of return.
Okay.
Right. In most cases, if they're retired already, we're just trying to keep up with inflation and have a modest return. So if we can get somewhere between 6 to 8% in a year like this year where we were making 15 plus, it's been a tremendous year.
Yeah.
So a lot of my clients subscribe to the fact of, if you're making money, you're paying taxes. And what I mean by that is, when you have gains in certain accounts and you sell that stock, you're
Yep.
going to have to pay taxes, right? And so it's not a conversation that I mean, everybody's like, geez, I have a secret partner in the government that's going to take X% of this money,
It's
right?
not so secret, Mark. Okay.
That's right.
Not
Yeah.
so secret. No, no. You're going to make money. You're going to pay money. You're going to pay taxes. Absolutely.
That's right. And so there comes a time where we have to think about, rebalancing, and that sometimes it's a conversation of taxes and risk, and and we understand that we're going to have times where we're going to have to pay some taxes along the way because, we've had good years. So,
Yeah. Yeah, that is true. So now that we got the tax part of the thing out of the way, what are some of the other things that if I'm ready to play defense and if you're advising me to play defense,
mhm.
what are some of the things that I should be looking at?
Well, when you're talking about defense, it's really about potential risks in the future.
Yeah.
So when you think about looking at the overall financial strategy, we always um, plan for the unexpected. And so making sure that you have certain buckets filled for things that you want to that come up. For example, maybe when we're doing the annual review, we're looking at, what do you have in your reserves? Typically you want to keep 3 to 6 months in cash. That's
Okay.
important to look at that. And so maybe we need to fill that cash bucket up. So that's one thing that we need to look at. The other thing is, if your assets have grown, and maybe you want to consider reviewing insurance policies. Do I
Mhm.
have the adequate amount of death benefit if something happens to me now? Maybe you've bought a new house and it's time to relook at, liabilities and insurance and college planning and all of those things. And so defensively, I think it's important to assess all the potential things that could happen in the future, and get and prepare for that. Maybe it's time to have discussions about long-term care and all of those
Mhm.
kind of different things that may come up in the future. So I think that's smart. It's always in the back of my mind of, what are my clients' challenges going to be in 5 years and 10 years and 15 years from now, and how can we plan for that today? And so having that defensive and preparation mindset, I think, prepares my clients for what's to come.
What? Well, not what. What if? Let me try to figure out a way to ask this question. If I come in and sit down with you and we review our what we've done in our accounts and stuff, what would make you think, or what would make you say to me, "Hey, Bill, I think you look lopsided." So,
Mhm.
how would you determine whether I was in balance? Because you referenced balance earlier in the program. You know,
Yeah.
imbalance or lopsided, and then what would I realized it would depend on how lopsided and what kind of way. What kind of actions would we take?
Well, part of it is that when it comes to investments specifically, we're going to look at your existing portfolio and stress test it to see how much risk you have. And then part of that stress testing is, we can look at past markets and say, in 2009 we saw a 53% decline in the S&P.
Yeah.
what you have today, if we went through that same market, here's how that portfolio would have performed. And when my clients see the comparison between a 53% decline in their portfolio, maybe they would decline by 48%. They're going,
Yeah.
whoa, wait a minute.
Mhm.
That's a big tell of. And then when you take that percentage and you think about it in real dollars, so if say we're talking about $1 million portfolio that just got cut in half because of a market decline,
Yeah.
and they're in balance too. So now they're susceptible to that kind of loss as well. So I think from an investment standpoint, that's the trigger of, hey, we may need to look at this. However, sometimes that risk is opportunity. And maybe there's times to when we've had really good years, maybe it's time to take some of those profits, be defensive, and then have cash and ready to go if we see a market decline. So just different ways to look at,
Yeah.
different strategies to be opportunistic, but also defensive.
So basically, what you're saying is that we should look at our portfolio, our entire portfolio, investments and everything else,
Yes.
and do what a lot of NFL teams are doing right about now, which is they're looking at their season going, it just, we've got some issues. And they're trying to decide whether they need to focus more on the offensive side of the ball or the defensive side of the ball. Is that kind of where we're going here?
Yeah, you're right. You're exactly right. And there's all this analysis of, there's a how much should we devote to this, and what are the options? And so I think it's very fun for me to sit with clients, and when they see the lights turn on, saying this is why we're doing these things, and here are some options to consider, so that way you're in a better position.
Yeah, no, that's fantastic. If anybody's listening to this podcast, Mark, and they are finding this conversation interesting and they're not already clients of yours,
Yeah.
how would they reach out and get a hold of you and have at least have a conversation with you about
Yeah.
this?
Well, our information will be in the show notes, but we'd love to do a Zoom meeting. Our team is always available to talk to you, and looking forward to that.
Yeah, and please do. If you don't know Mark, I can assure you he is as personable and as warm as he sounds during these podcasts. So if you're looking for somebody to have a and this is not right, Mark, because someone contacts you, I want to underline this part of it.
Yeah.
Initial conversation doesn't commit you to anything. That's just
A-
basically an introduction, right?
Absolutely right. Yes.
Yeah. So it's like you might find yourself somebody you want to be doing business with. So, reach out, have that conversation. The other thing you can do that's really easy, that doesn't involve much else but touching your screen, is hit the follow button, become a subscriber to the podcast. That way you'll never miss another one. Every time a new episode is released, you'll be notified. You can give that one a listen as well. And please give it a like. Tell friends about it if you find it a useful podcast, because word of mouth promotion is very much appreciated. Until next time, thank you so much for taking the time to listen. On behalf of Mark and everybody behind 360 Advisors, we appreciate you, and we'll catch you next time. Thank you for listening to Beyond the Dollar Signs Financial Clarity. Click the follow button to be notified when new episodes become available. Visit our website at advisors360pwm.com or give us a call at 408-778-8280. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Advisors 360. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions that you may have regarding your investment planning. ECA does not provide tax or legal advice. Guest opinions are their own and may not reflect those of ECA. The viewer is encouraged to seek their own individualized tax and legal advice from a qualified professional.